Hello everyone. So let's talk about some trades that I've taken recently. So this is one of the pair Euro versus New Zealand dollar. So what I've analyzed is if you take a look at a bigger picture, so price is consolidating, and now after some consolidation, we have a great and a strong support area here at this rectangle, and then we have upper resistance here. So what happened is when price starts to reject, there's an impulsive move down. So I've written it here. I'll just zoom it. So it's an impulsive move down. Then price went up, touches the rejection point, the resistance point, and then goes down again. Then again it corrects a bit, then it starts to go down. So if you want a more price confirmation action, you have to follow this and you have to understand that how to carry a trend, how to follow a trend. So now the trend is changing, price has to go down and it is going down. So if you did not enter the trade here, you should have entered it here or here. So price went down, then we see some correction, then we see a break of trend line, and then price again went down, then we see another correction here, then we see another break here. Now price is consolidating. So if you want to open a trade, you have to look at a smaller picture. So let's open a 1 hour chart, or maybe a 30-minute chart. Let's open a 30-minute chart. So this is a 30-minute chart. Let me open even a smaller, a 1 minute chart, and see what is happening. So what was happening after the impulsive move down, price went up, little correction, then it again broke this level. Even at a smaller time frame, you will get a good move down. So I have opened a trade somewhere here again, and then I got this much, and then again price is going up. We see little correction here, and then again go down. So if you look at a bigger picture, or a 30-minute or a 4 hour chart which was there earlier, so if you see, we are expecting price to go down to this level, uh, the upper trend line. So that's the upper trend line. We have few touches, and then again we are trying the price to go down to this level. So this is one trade that I've taken. Another trade is another in a Kiwi pair. So earlier what happened is, so this was, price was going down, I was hoping some reversal here, so I took a risky position and bought here. Then price went down again, and then I bought again, one position opened here again. So now after that, after some correction, price starts to go up. So if I draw a trend line here and see where, so if you see this, that was a downtrend line. This rejection, this rejection, this rejection, and then we saw some upside here, then again went down, saw again upside, then went down, and after it did not cross the upper trend line, it was just on the support, just on the verge of it. Then we see another, the main support level is here, so it did not go that much down and it starts to go up. So this is another trade that we have taken at this level and at this level. So the second trade is in profits. I am hoping this trade will come in profits. So we are looking for an upside here. So if you talk about this area, so at a bigger picture, we are looking of Kiwi to go up. You can say that this was a peak, so at least this high. Then we see some rejection here, and it might go up again. So this is a bait on Kiwi versus US dollars. This is another interesting pair, Australian dollar versus New Zealand dollar. So most of my trades are in New Zealand dollar. So I know it's not advisable to put all the money in the same pair, but we have got opportunities and we are taking minimum risk, so it's fine. So talk about the bigger picture. This is a 4-hour chart. Okay, so what is happening? So this is a prior resistance level. Okay, so price went down, it went up. Now we see some rejection here, we started taking trades here. So how do we pick up these points? So you have to understand what are support and resistance zone. I'll just post a link in this video. Go check and read my blog about support and resistance. You'll be able to draw these zones perfectly. So yeah, so price starts to fall down, there was correction. I'll just zoom it here. Yeah, price starts to fall down, then a correction, then it went down again. So at the break of this trend line, I opened my position, and it was a big move down. It was a big red candle here. So now I'm expecting price to go at this level. So expect this much. So even if you have open trade here, I'll just show you. If you have open trade here at this level with stop loss at this point, it's almost 1:1 risk to reward ratio. If you talk about New Zealand dollar versus Kiwi, so I have open trade here. I want a good risk to reward ratio, so long position, one position is here. I'm expecting this to go until this and do a bit of, you can say, yeah, so we have almost 1:2 risk to reward ratio here. Talking about Euro NZD, it's a good move, so let me just zoom it and see. So even if you have opened a position after the correction and a break of this, you can say that a short position here, stop loss is bit up and then move down. So it's like 1:3, 1:3.5 risk to reward ratio. So we have couple of we have taken these trades, and let's see how market reacts. Please do take care of risk and lot management. These are impulsive moves, and you have to take care of your risk. So I'll keep on posting some of the videos and some of the trades that we are taking next week or this week. Till then, take care, have a nice day.